Well, all three major indices finished higher for the day and subsequently continued the strong string of record closes since Election Day. In fact, for the Dow, now it's 76 days in a row, 76 record highs, rather. Standard & Poor's 500, 61 days. NASDAQ, 73 record highs. Big news late in the session, reports that the DOJ reportedly demanding that AT&T and Time Warner either dump the Turner TV unit housing CNN or its DirecTV satellite unit if they want to get together in their proposed merger. AT&T CEO Randall Stephenson replied by taking off the gloves, saying, "Until now, we've never commented on our discussions with the DOJ. But given DOJ's statements this afternoon, it's important to set the record straight. Throughout this process, I have never offered to sell CNN and have no intention of doing so." By the way, after the bell, we saw a revenue beat from 21st Century Fox and guidance for closing that Sky News deal by June 30th of next year. And we saw a real big upside from Roku, one of the newer issues out there. It crushed Wall Street consensus, much smaller loss than expected. You can see that stock up 28% in after-hours trading. Now, during the session, the big winner, believe it or not, were consumer staples led by Colgate-Palmolive, Kellogg's, and Kroger. Kroger, by the way, shifting their cloud spending to Microsoft and Google in order to compete more with Amazon in that changing world of groceries. But let's face it, the broad market doesn't follow the lead of supermarket stocks, which kind of points to a partial dilemma for investors. We are seeing an increase in declining stocks and stocks hitting 52-week lows, and leadership is becoming stretched. There's also concerns about the flattening bond yields here, the yield curve, and implications for the economy, as this in the past has been something of a red flag for pending past recessions. Here to discuss, Stephanie Pomboy, the president of MacroMavens. Thanks for joining the show.
Thanks for having me.
So you always believe I'm a little bit too enthusiastic about the markets and the economy. What are my rose-colored glasses blocking me from seeing?
Well, my objective is to identify risks that other people aren't seeing. So I come at it from a very sort of admittedly antagonistic standpoint. I'm a permanent skeptic, basically. So I'm always going to tell you, you've got the rose-colored glasses on. But when I look at what's happening in the economy now, as one of your earlier guests talked about, you have these headline confidence numbers from the business side and from the consumer side that all look very strong, and they've been going up dramatically since last year, this time, with Trump's election. Unfortunately, it's not being mirrored in the hard data, the real action.
Well, do you consider corporate earnings hard data?
Well, I do, and that's a topic we could get into. If you look at the GAAP earnings versus non-GAAP earnings,
No one's going to do that. I'm sorry. Just for the record, though, so folks who understand, GAAP earnings are your traditional. That's what the accounting geeks use. Wall Street use non-GAAP, and what they try to do is filter out what they think are just one-time events. But to your point, they're often recurring one-time events.
They're recurring, non-recurring.
Right. So I know you're an economic purist, but without getting too deep in the weeds there, though, what are some of the other things that you're concerned about? Because I do see where businesses are investing, durable goods investments have bottomed out in May. They've been on the rise. We see we're seeing more and more where businesses are starting to put some money out there. The wheels of commerce are moving. So what should we be concerned about? What are the red flags out there?
Okay, well, there are several things. One, M&A activity, notwithstanding this latest week where we've had a flurry of activity, and maybe that does betoken a shift here. But you've seen a sharp decline in M&A activity. It's down like 30% from its peak a couple of years ago, and it's down 15% from Trump's election a year ago, which is surprising because, again, you had all those confidence numbers come up, and the corporate sector seemed to be, excited about the prospects, but they haven't. Are
you getting any negative messages from bonds, from bond yields?
Yeah, well, of course, the yield curve flattening, and it's been dramatic just in the last week. We've seen an incredible compression in the yield curve. And I would also add into your comments on the internals in the market, Walmart has been performing really well, and that's been a great signal of turns in the economy. When Walmart starts to outperform, it's generally not a good sign because it means more people are having to shop.
I thought it was just because they said that their cloud business was catching fire. But again, Stephanie Pomboy, thank you very much.
Thank you.
Really appreciate it.